Hey guys, it's Carter. Welcome back to the channel. Hope you guys are all having a fantastic day today. Now, in today's video, we are going to be talking about the only indicators you guys need for swing trading. I love the expression MISS, M-I-S-S. Make it simple, stupid. I'm not the type of trader that's going to have 30 charts up. I'm going to have monitors. I'm going to have, the stock ticker going across my walls. No. I'm going to have two monitors. I'm going to understand the positions. I'm going to understand what's going on with the stock. And guess what? Here's the thing about trading. One, I don't have to trade. A lot of new traders think you always need to be in positions. For me, I choose quality over quantity. So we're going to look at a position that we took. And so I hope you guys all enjoyed this. If you do, smash that like button, subscribe. If you guys want to learn more about trading, like how to find undervalued stocks, how to build a strategy, I help you build a strategy. You guys have access to private live streams to ask questions, a group chat to ask questions and be around like-minded traders. So it's our school. It's called the Swing Trading Masterclass. We have an awesome sale going on right now for 51% off by using code MONEY. So I'll see you guys in there. Hope you guys enjoyed it. Check it out down below. And if you guys really want to be my best friend, check out our new merch. It's so incredibly awesome for investors and traders. And it's just something that I'm super excited about. I ordered a bunch of it. So some should be starting to come in here this week. So check it out down below if you guys want to support the channel. It does mean the world to me. And let's jump into this here. So indicators. What are indicators? Why do I use them? Are they worth it to have? All right, so indicators are a way technical traders get an edge over the market. So I'll be completely honest with you. I use 2 to 3 indicators. Yes, I'm not, like I said, I'm not a trader where I'm going to have a lot of stuff going on. I'm just going to understand the position, understand the stock. So let's kind of talk about here these lines right here. So these are what we call EMA lines. They're moving average lines. So these lines, they act as trend indication. So you can look at it. You can see just the overall trend of the position. They also act as support and resistance. And you might be saying, well, Carter, how can they act as both? Well, when the stock is above them, they'll have tendencies of acting as support. When they fall below it, like it in here, you can see where it hits these lines and it just has a hard time breaking above it, right? So ideally for like your trades, you want to get in when the stock is above them, if not touching them. So the difference between the yellow, the blue, and the red are just support levels, support strength, right? So the yellow here is the 50-day EMA line. So it's not going to be as hard as the blue, which is the 90. The red is the 200. Now, people love to say, Carter, well, why do you use the 200? Why not use the 250? Why not use the 100? Why not use the 50? Well, or the 20, whatever it is. Well, here's the thing. It works. I found something that works well for me. Some traders will use those, and that's completely fine to use. But for me, I've been doing this for over 7 years, and this is what really helps me get a general gauge of the market. So let's kind of talk about here, like a quick breakdown of how I would enter a position. Okay, so with Berkshire Hathaway, BRK, this is the Class B stock, so it's .B. We have that beautiful upward trend, as you guys can see. Now, you guys will notice that the stock here in the past has sold off down to this 200-day moving average line. And what happens? Hit it, buying pressure. That's very important. Before you ever place a trade, you want to make sure that the stock has tendencies of getting some sort of buying pressure at what you're looking at. So with these moving average lines, it just helps give us, more indication where if it sold off, we could get a nice move going that way. Okay. Even back in here where it sold off again, right? Where it hit it twice here. So we have 1 and we have 2. Where it hit it 2 times, establishing good buying pressure. Even in here, right, we can classify this, as a couple in there. So, ideally we have a good amount, right? We have 1, 2, 3, 4, probably a little over 4. So ideally, you want to make sure there's like a minimum of 2 to 3. That's kind of the standard, because you want to make sure that there is consistency with it, right? So now here with Berkshire Hathaway, the stock sold off down to that 200-day moving average line. So, at the time, it kind of looks something like, let's see if we can get it. Something like maybe a little bit more like if it like that. Okay. So now a lot of new traders would go, oh my gosh, let's enter the trade. But what I always get nervous of is you enter the stock and it just sells off more, right? So, what are some other indicators that help? Well, one of the indicators is looking at the RSI. Okay. The RSI stands for the Relative Strength Index. It pretty much tracks momentum to ensure that you're getting in on a spot where we've seen natural tendencies of getting buying pressure to help you with your support. So, at the time here, if we remove this, it was trading for about a 33, which the last time it was trading for a 33 was back in here where we saw good buying pressure. Previous to that was in here where we saw a nice little move going up, nice little move going up. So the RSI will just help you with that. Now, another indicator that you could use is the MACD indicator. The MACD indicator really just helps you for entries and exits. So, what you want to do is you really ideally want to look at this, and you really want to sell on the breakdown. So, you see where this orange line, that's the signal line, breaks up through the blue line, which is the MACD line right here. That is the entry point, right? So that would be near and around this range. And then on the complete opposite spectrum, right? Big sell off down this way. So you'd want to sell on the breakdown in about here. Okay, so in about here, selling here. So just by using, this would be about a 6% return. Okay, so just the MACD will just help you give it reassurance. Sometimes the MACD will be delayed a little bit, which that's why I'm not a huge fan of it. I would more along the lines of use like confirmation, which I'll show you guys next. So after we understand support, we have a general idea of where we kind of want to get on the position. The next thing here is looking at a lower time frame. Okay, looking at a lower time frame is incredibly important to this here. So you guys can see that where we saw this huge sell-off was in such a short amount of time where it just got absolutely crushed and it kind of just sold off down like this. Ideally, honestly, what we would see is more days of kind of like a squiggle, kind of like how it was going up. Okay, so given that it didn't do that here, one of the things we did is we just threw an alert and we honestly just threw an alert above it and we waited for a new trend to form. Okay, so it popped up, hit that 200-day moving average line, which is fine, sold off, and it started finding this trend. And this is kind of where we got in on this position. Okay, entering in this range here, giving indication of new support because you can see these wicks right in here. Right, if we look really close, you can see these long wicks. Those wicks represent buying pressure. Buying pressure is exactly what we want to look for when it comes with trading. So, given that there's some indication, and you can see that the highs were getting higher and the lows were getting higher, right? Each hour the lows were a little higher. So, it just gave more indication of a trend, right? So, now here we have this like that. Okay, so now here we're continuing to hold the position. Well, why, Carter? Well, we're just letting this and we're using this trend line as our stop indicator. Okay, so it's going up, 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 and up. On the breakdown of this would be our ideal exit. And this is where we sold out a good chunk of change with the Berkshire Hathaway position because now it's a trend reversal where we have this, right? So now some traders would actually enter a short trade here, but given that we were already holding the position, we kind of just decided to get out and just sell out majority of it. And what I mean by majority of is about 75%, 80%. So we're still holding some. And the reason why we kind of continue to hold because there was a possible move going higher, hitting all-time highs, and you know I'm somebody where like blue chip stocks, I always can average back in if they sell off. So, and especially just given the market conditions we're in right now. But yeah, this is how you use indicators. It's not overwhelming, it's not hard. You just got to know what you're doing, and that's important. And when it comes with being a trader, the biggest thing is just practice, learning, and that will just help you be a better trader. So if you want to learn how to find these plays and, everything about trading, check out our school. You won't regret it. It's called the Swing Trading Masterclass. Check it out down below. Use that code, sign up, code money, and check out our merch. It really, really means the world to me. Also, guys, a lot of people always ask, they go, Carter, what broker do I use? Well, yeah, I use Moomoo. I'll put a link to them down below as well. I'll see you guys in there. Hope you guys enjoyed it. Like, subscribe, and hope you guys have a great rest of your day and take care.